Hello everyone, it's Sacha here. Hope you guys are having a great day or afternoon or evening whenever you're watching this video. And today in this video what I'm going to be talking about is investing as a teen and how to become profitable as a teen and how to make your money essentially work for you and how to grow your money so that you will be able to learn how to do these, or essentially you'll develop these skill sets as you grow older. And they're really useful skill sets to know, so yeah, let's get into this video. So we're going to be talking about investing today in this video, and essentially the primary thing that we're going to be discussing in this slide is the different places where we can invest. So it's best always legally to invest under your parents' supervision. So different applications or platforms that allow you to do so are some of the most famous ones include things such as Robinhood, Webull, TD Ameritrade. Personally, I prefer Robinhood. It's just pretty easy. It's got a great user interface, and it's just really easy to use, especially if you're new to it. So everything just makes sense, it's fluid, and yeah, I would recommend it. So another thing to be really careful of when you invest your money is to have a good sense of risk management. So essentially, never invest your money that you aren't okay with losing. So say you invest $500 into a stock, and before you invest that money, you want to be okay with the fact that you may lose all that $500. So you shouldn't invest money that you aren't okay financially losing all of, if that makes sense. Obviously, when you invest money, that's not the goal, but you need to go in with that mindset and have that stability so that you won't be in a bad situation if that is the case. And another good thing to take note of is to protect your profits. What I mean by this is profit is profit. When you're up in the market or really any investment this goes for, you should protect your profits. Like say you're up 20% on your investment and you will get greedy. Just know that you're up that 20% that you weren't before. So it never hurts to take your profits out. And you should usually go into investments with goals and price targets. So say you invest your 500 or you buy a stock at $500, it hits 550 within a couple of weeks, and your goal was 550. You should take your profits. Don't get greedy because that was your initial price target. And yeah, just essentially greed is the one thing that you got to be careful of because that's what's going to make you essentially hurt your profits. So you got to be careful of that. And how to invest. How do you find the best stocks or essentially really any investment? So the number one key tip is just follow up with the news and essentially build up with hype. So how the stock market stocks work essentially is when people have buy a stock, the stock goes up. When they sell it, it goes down. It's pretty straightforward, but that's essentially how it works. Yeah. And so the higher demand for a stock there is, the higher the price is going to be. And yeah, so one thing that you could take note of is the stock's earnings reports. Usually right before an earning report, usually demand for a stock goes up a lot in anticipation to see how the company does on the earnings report, which is when they report the revenue for the quarter. And they do that 4 times a year. So you could look into those with companies such as Apple. They have their earnings reports, and usually in anticipation, or even Tesla, their stock goes up a lot. So it'd be a good time to invest right before the earnings report and then sell it once you hit that price target you set initially. Or you can also use things such as Acorns, which will give you market data and just general news and stuff. Or you can use things such as Reddit, which all those different retail traders use. And you see all those pump and dumps and stuff. Like usually all those retail traders go on Reddit and they just go on meme, I guess. And they just try and make as many things as they can. They just post information, try to spread the word of stocks. And when that essentially, on Reddit, people create demand for stocks as more people go and buy it. And that is going to ultimately bring the stock price up. And finally, so we're going to be talking about different types of investments, and we're going to be going with the most reliable ones. These are the 3 most reliable. So the first thing would be index funds. So what is an index fund? An index fund is essentially a fund or a stock, you could say, that has they have shares of a whole bunch of other stocks with inside of it. So a great example of this is the SPY. So this is the S&P 500. The S&P 500, and the ticker is SPY if you want to look that up, is a index of the 500 most profitable companies. Don't quote me on that, but it's the 500 top performing companies in the NASDAQ and NYSE. So as you can see here, Apple holds a large share, Amazon holds a large share, Alphabet holds a large share, this is Google, and so on, right? And I think this is kind of an outdated picture, but because Tesla should be in here as well. But that's essentially what it is. You can see there's also a whole bunch of other decently performing stocks that are in here. These are known as blue chip stocks that are in the S&P 500. These are notable stocks. And yeah, this is essentially a really good index because when you invest in the SPY, you invest in all these other companies as well, which is a whole bunch. It's a combination of a whole bunch of really great performing companies. And also, really another good way of investing is just shares. Like the shares of any reliable company that you know is going to do well, such as Apple, Google, Tesla, Facebook, or Metaverse now. Really any of those types of things that you have confidence in. Or if you do your research, you find a good company, or you think in a sector, for example, the EV sector is going to do really well in the future, that would be a good investment as long as you believe in yourself and you believe in your confidence, you're confident about it, that would be a good investment. And finally, another good way to do investments would be to invest for dividends. So really with dividends, you want to have a lot of money to invest in a stock because how this would work is essentially each stock that you have, if they pay out dividends, they will pay you a percentage of the amount of stock you own on a time frame. I think it's every quarter, I believe. So for example, if you own shares of AT&T, I think their dividends are 7%. So with AT&T, every quarter, first I think it is quarter, they would pay you 7% of however much money you have invested in the company, and they give it to you just for free. Just that's how a dividend works. So it's compound interest. So compound interest basically saying like, yeah, you have this amount of money in the thing, we'll give you 7% of extra, and then so on every quarter, or every year. I don't know how often it is, but that's how dividends work. And it's also a really good way of investing because you're guaranteed money back. But although the stock price may go down, this company is essentially paying you for holding on to their shares. So yeah, that's pretty much all I got for you guys today. So I hope you guys enjoyed. If you did, please feel free to leave a like and subscribe on the video. It means a lot to me. And thanks guys. Peace out.